This is Dr. T. Varalakshmi discussing you about the preparation of the trial balance as a part of business economics and financial analysis. The third step in the accounting cycle is the trial balance. First step is journal entries. Then from that journal entries, we will segregate each and every transactions under the ledger. Now, under the trial balance, whatever the carried down amount balances are all there in the ledgers, that is carried down. If the carried down amount of the each and every ledger account is at the debit side, all the debit balances as well as the carried down amounts of the ledger accounts credit side, that all that credit balances are all going to be verifying before going to preparing this trading account, profit and loss account, balance sheet, where it treats as a final accounts. So that's why the trial balance will always treats as the pre-final account or the pre-balance sheet of the organization. So if anything is missed in the journal entries or in the ledger accounts, that is easily find out and errors can easily rectify with the help of this trading account. That's why in bookkeeping systematical method, the worksheet contains this closing balances of all the accounts and as well as this opening balances of all the transactions, that is debit balances and the credit balances, and the totaling of the two sides to verify or the checking the transactions which is taken on the left hand side is equivalent to the right hand side or not. If we won't prepare this one, because why it has to prepare means it helps in detecting the errors and gives the overall idea of all the ledger accounts, ensuring that every debit is having the corresponding and opposite effect is there or not, is verifying through this trading account. So that's why on the debit side, all the expenses, cash and assets information they will mention. On the credit side, all the incomes, capital, reserves. On the liabilities positions will be mentioned. So here the some of the elements may not be detectable, that is undetectable errors like a reverse entry. So, or if they have not forgotten, if they have forgotten that transaction itself, then that transactions they need not to rectify. But if the transaction has done, but wrongly if it has entered the amount column wherever it is, that can be easily find out with this trading balance. So if you see this trial balance proforma, the title of the trial balance as at so and so company's name we have to prepare and this time period, and the serial number, ledger account, LF ledger folio number, that is from which that books reference pages reference number they have to mention here. If that ledger account is at a debit side, debit balance is there, debit side, and credit balance is there, credit side. So furniture account is there. So furniture account 10,000, and if the sales were there and how much of sales it has done, 1 lakh rupees, and so like this every transaction. So debit side means debit balance or credit means credit balances they have to mention. If we see this heads under this trial balances, generally the furniture and fixtures account, it will comes under the category of the assets. So that's why it comes under the debit balances. If they have purchased the plant and machinery account, this is also comes under this assets. So again, it will comes under this debit balances. So because they are all purchasing the goods and that too it is increasing means the cash is debiting from the organization. So that's why if the assets increases, then the debit balances will be increases. But in a reverse manner, if the furniture and the fixtures were sold or the plant and machinery was sold, then though it is an asset, it is reducing from the organization means we have to mention under the credit thing. But in a prospective manner, they have purchased, that means if the assets increased, then it is on debit side. And that's why we should not think that one account will always comes under the debit side, but based on the situation, it will be comes under the debit or credit. And next thing, discount allowed by the organization. Discount allowed means for the organization it is an expense. So if it is an expense means the organization giving that benefit. So always givings will becomes under credit. So if the expenses increases, credit. If the expenses reduces, again it will be debit. So that is discount received by the organization means income. I'm sorry, ఇది రాంగ్ చెప్పాను. ఇక్కడ నుంచి నెక్స్ట్ డిస్కౌంట్ అలౌడ్ మీన్స్ that is an expenses to the organization and that our expenses are all increases, then we have to mention it under the debit thing. If the same discount allowed is reduced by the organization, that is received by the organization, then that might be in the credit. And a discount received by the organization, that is an income to the organization, that's why it is under credit. And salary account expenses, so debit. Wages account expenses, commission allowed, all these are all the expenses, so debit balances. And income is there, then it should be under credit balances. So like this, whether it is an asset, liability, income, revenue, or the owner's equity. So based on that one, as like we have discussed in this previous double entry mechanism, that rules and regulations, based on that one, the debit and credit balances will be recognized. So trial balances examples, if we see the cash balances with the organization, if it is let us say 32,000, account receivables, inventories, and all these were on or debit sides, and the remainings are all like a credit sides, that is a account payables, that is an expense, that is the bills which they have to pay, and long term liability, equity shares, wages, dividends, revenue. So like this, if all there, the debit balances are all adding and the credit balances are all adding, that must be equal, then only we can come to know that one, the transactions has done perfectly. So if they see the objectivities of this trial balance, these are all there to check the arithmetic accuracy of the transactions which are recorded in the journal entries, and it is very useful for the preparation of the final accounts like trading account, profit and loss account, and the balance sheet. It summarizes the entire ledger accounts of the organization and easy to locate the errors in these transactions. So for the purpose of this trial balance is to check the equality of the debit and credit balances in the ledger account, and any uncovered transactions or the missed transactions in the journals can be posted under this adjusted trial balances. And T, the form of the T will provides the information of preparation of these financial statements, that is debits as well as this credits. The advantages of this trial balance is to check the debits are equals to the credits or not, to find out the uncovered errors in this journalization, to find the uncovered errors in the posting, to locate the errors in the ledger account, and to make the financial statements easily, and there to list out the all the transactions involved in the journal and ledgers at single place, and to make the adjustments for unrecorded transactions, and to find out the missing amount in any special cases, and for the mathematical accuracy of the recording procedures, these trial balances are all prepared. It has certain limitations too, that is, it may not be able to find out the errors. Some are intentionally done, that is, transactions has not been entered into the journals, may not be find out, or a wrong amount has been written in both the columns, that is under debit and credit side. If the both the side, if they have wrongly entered that one, it is not find out. On debit side, one real amount, on credit side wrongly if it has entered, that only find out with this trial balances. And a wrong account which is mentioned in the journal may not be possible to identify, and entry has not at all been posted in the ledger if the ledger is not at all considered any of the entry, and entry is posted twice in the ledger, that is a double time if they have posted, that is recording the trial balance, and this may not be finding out easily with the help of this trial balances. In this recording of this trial balance, three methods are all there, that is balance sheet method, total method, compounding method. So here the balancing method is indicates the method of adding this debit and credit sides of the ledger posting will they take, that will called as the balancing method, whereas the total methods will indicate the total of the debit and credit sides of the uh, ledger and journal entries are only taken into consideration, then that is called as the total method. In the compounding method, both the combination of balance method and the total methods will be called as the compounding method. So the types of the trial balances will be like adjusted trial balance, post closing trial balance, and unadjusted trial balance. So we no need of there is no errors at all. They have prepared this trial balance, that is unadjusted trial balance. If some errors are all there, they have adjusted that one, that is adjusted trial balance. And once the balance sheet is prepared, if anything is find wrong, and again if they do some modifications in the trial balance, that will be called as post closing trial balance. So that's about the trial balance, its types, its advantages and limitations. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.